Hey, welcome to the Mortgage Minute. You know, there's an old Chinese proverb that says, may you live in interesting times. And yet again, we're there. I was over at the World Outlook Financial Forum by Michael Campbell on the weekend. Fascinating event. Drew 1,500 people here in Vancouver. There were dozens of speakers. And the joke at the end of the day was, the message was to sell and to buy. And literally, half the people were saying one thing, half were talking about other things. And of course, the big topic at this conference, which was more about the markets, we talked about oil, gold, the general markets, commodities, bonds, etc. But of course, the big thing was, are we in a position for a correction in the markets, or is this just a little blip? And the next day, Monday, the Dow Jones plummeted 1,500 points. It plummeted 600 points on Friday. It got to minus 1,500 on Monday, settled in at about 1,100 or so, and then at the end of the day, we had a slight rebound this morning and yesterday. So the question is this, the correction we've all been waiting for, is it a little blip in the market? So a lot of the talk over the weekend was really around where these markets are going and what's happening. Of course, there's a lot of capital being repatriated into the United States. A lot of people feel that has nowhere to go except into the markets or into the real estate. In the meantime, something that I found very few people are talking about, but actually I think has potential to be a pretty important topic, is the fact that Janet Yellen was the chairman for the Fed. That's the American equivalent of the Bank of Canada. Now, she was replaced by Jerome Powell. Jerome Powell, pay attention to this name. I'm going to throw out a prediction here. Jerome Powell is the first Fed chairman who doesn't come from a political background. He's actually a business person. The suggestion, the sentiment is, he may not come in with quantitative easing. He may be the one that says, no, we're not going to print any more money. He may choose to let the markets fend for themselves, companies fend for themselves, without printing more money, which will create inflation, which means there could be more investment into the US dollar. What does this mean to you if you're a real estate investor here in Canada? The more money that goes to the US dollar goes up. If they keep raising interest rates in the United States, it's going to bring more money into the US dollar, and the Americans have this catch-22. They do not want the American dollar to go too high, but they feel they need to start raising interest rates. As they raise rates in the United States, we may look for a raise here in Canada. So what's my big message to you today? I'm going to suggest Canada is going to have 2 more interest rate hikes, going from 3.45. I predict that by this time next year, the Bank of Canada Prime will be 4%. So now start doing your math. If you have prime minus a half point, that's 3.5%. If you have the ability to lock in a fixed rate mortgage, listen carefully, if you have the ability to lock in a fixed rate mortgage today at anything below 3.5%, I'm going to suggest you do it, because by the end of the year, prime's going to be 4%. So changes are coming. Pay attention, and again, as always, if you're not sure what to do in this market today, please give me a call. We're going to be following this very closely over the next while. In the meantime, just some interesting stuff here. I had to share this. It's the new Oak Ridge Center for those of you here in Vancouver. I'm finding this is a fascinating real estate development project, and we're seeing a lot of this in the Vancouver area, large mega projects. So the real estate boom is not dying. Things aren't slowing down. Look for more of that to come. In the meantime, when it comes to real estate and the markets and the volatility and fluctuation, 2 really important things. Number 1, if you have all your RSPs in the markets, I strongly recommend you look at having non-correlating assets. We've been talking about this for a couple of years now. You should invest like a pension fund. How does a pension fund invest? They don't put all their money into the stock market. They put some of it into real estate, some of it into non-correlating private equity. That's why we promote things like putting your money into a mortgage fund, etc. The other reason we promote Lonsdale and Newport Wealth as our portfolio managers is because their portfolio has non-correlating assets. And for everybody here in Vancouver, next Thursday, February 15th, send me an email if you don't already have the invitation. We're going to be holding an information session for a chance for you to meet Jansen Shrub, the portfolio manager from Newport Lonsdale Portfolio Managers and Newport Private Wealth. This is going to be a really good informational evening. You're welcome to come if you're in the Vancouver area. Send me an email. We'll give you the details. That's going to be Thursday night, January 15th. February 15th. Wow, we're already into February. Anyways, folks, that's it. Lots of news. Have a fantastic week, and we'll keep you up. Post it and update it. Send me an email if you'd like more information. Thanks. That's the Mortgage Minute for today.